Hello investors, I'm Stuart Kruse and welcome to Kruse Asset Management's Charts of the Day. Normally on Thursday we talk about unemployment, and today is not going to be any different, but we're going to look at and examine some other economic indicators. So today initial unemployment claims came in around 740,000. We're expecting 700,000, so worse than expected. And still above, about 100,000 claims above the worst all-time week during the financial crisis. So on the charts here from our friends at White Charts, we have the chart of initial unemployment claims, and I'm going to add continuing claims on there. But as you can see, these numbers are in decline, so that's obviously a great thing. We're looking for lower initial claims. We're looking for lower continuing claims, so that is indicative of a recovering economy. Now, what could derail that? Of course, coronavirus. So let's take a look at some of the coronavirus numbers. Here we have the United States coronavirus cases at 11 million call it. And you look, looks like we are accelerating to the upside. Now, if we go through these one by one, here's the coronavirus death rate. So that looks like it is considerably accelerating to the downside. Now, that may be a result of morphing. That may be a result of the virus, more testing, so fewer people that are positive are actually dying that we know of. It might be a result of the people that are catching this virus tend to be younger and more healthy. It might be a result of the fact that our healthcare professionals figured out a much better way to treat the virus. All of those are probably true, and as you can see, the rates are declining considerably according to the reports. Now, if we peel back some of these cases and the death rate, we can look at cases per day spiking up in the neighborhood of over 100,000. Seemed like a lot. Now we're at 160,000, peaked out at 172,000, and deaths per day, we are coming up on 2,000 deaths per day. Okay, so this could derail the economy. Of course, if we have further lockdowns, cause more unemployment, more continued claims, that could be a problem. But for now, if we look at home sales charts, existing home sales is this number. I'm going to take U.S. starts off there. So look at this existing home sales. We had a fall off and then a monumental jump. So home sales market is on fire. Home starts and home builders, if you can look, it's trying to match these home sales. So again, a very robust area of our economy. If we look at the Philly Fed manufacturing activity, this is a 3-year chart. So this measures how is the manufacturing doing in our economy, measures some very heavy manufacturing states like Pennsylvania. And I'm looking at a 3-year average number of 13.6. If we look at a 5-year average, that's 13.5. A 10-year average, 10. So call it between, if we look at a 1-year average, call it between 10 and 13 is a norm for us. And here we are at 26. So that looks like our manufacturing activity is doing phenomenally well. Definitely rebounded off the bottoms. And then last but not least, let's look at consumer price index year over year. As you can see from this 5-year chart, consumer price index, and let's put on an average here. Consumer price index. So that's basically inflation. How is the basket of goods inflating for the normal consumer? And on average over the last 5 years, we've seen about a 1.6% inflation rate or consumer price increase. 10 years, same thing, 1.6. If we look at where we're at right now, 0.6. So inflation seems to be in check for right now, but well off of what we're really afraid of is deflation. Deflation is highly problematic. So we're not seeing deflation, we're seeing some inflation, and that's basically a Goldilocks zone. So for right now, the economy looks fantastic. What could derail the economy? A non-peaceful transition in the White House, that could derail the economy. Some sort of political fight does not look like that is going to happen in spite of what Trump is trying to do and dragging his feet. It looks like the vast majority of people around this process are suggesting that Biden will be the new president. Trump would have to flip several states in order for that to be an issue, and it does not look like that's gaining any traction right now. So for right now, it looks like the economy is on track. Even the coronavirus numbers don't seem to be derailing anything. The stock market has been down 3 days in a row, but down modestly from a very high point. So you're up 11 or 12% year to date in one of the craziest, weirdest years ever. That's not bad. So to have a little pullback for 3 days is pretty typical. So I would say, is the Santa Claus rally intact? Is the year end of the market going to do well? It looks that way. Okay, this is Stuart Kruse with Kruse Asset Management on our chart of the day, helping our clients to live their life with the odds in their favor.